Hey, moneymakers, welcome back to another episode of Taking Stock Live. Yes, you got vacation Kalila today. This is my vacation look. Coming to you nice and tan and sleeveless, ready for another live show. And it is debate night. So we are going to be having a shorter than usual show tonight because I know you guys, and so do I, want to tune in to the debate on the economy tonight, which is going to be starting in about an hour's time. And you can head on over to PBCJ's YouTube channel right after we wrap up over here, because I have a ton of questions. As I told you guys last week, I was invited to be one of the questioners for tonight's debate, but I'm off the island. I did look into changing my flight because this is exciting stuff. You know, I love the politics as well, but it wasn't happening. It wasn't, the cost was too restrictive to change the ticket. So I just sat myself right here in Belize. I will be back next week in Jamaica though. So I guess just in time for the election. In the meantime, as we head on into the debate, tonight we are talking about a couple of things. You may have heard about Mayberry's new bond offer. They've been coming to the market for the past couple of years with a series of bond offers, and the latest is just about here. And then later on in the show, we'll be hearing about the performance of the Jamaica Stock Exchange so far. I think it's for the last couple of years. Yeah, for the past couple of years, how the market has performed. We're going to be getting a complete overview of that. So leave your questions in the chat. And of course, let me know what part of Jamaica or what part of the world you are joining us from. Make sure to hit that like button, subscribe to this channel, and tell a friend that Taking Stock is on right now. We're on and popping. Up next, we've got What's Hot in Business, and then we get right on into the show. With election campaigning in full swing, both political parties have announced their tax plans to sway voters. The opposition People's National Party says if elected, it would raise the income tax threshold to $3.5 million, about $22,000 USD. This means that only income above that amount would be taxed. Anyone earning less would pay no income tax. Meanwhile, the ruling Jamaica Labour Party says it will reduce the personal income tax rate from 25% to 15% on a phased basis if it returns to office. In March, Minister of Finance Favour Williams announced plans to increase the threshold to $2 million over a 3-year period. It increased from 1.7 to 1.8 million in April and will increase to 1.9 million in 2026, then 2 million in 2027. Tropical Battery is the latest company to graduate to the Jamaica Stock Exchange's main market. The company listed on the junior market in 2020. The move follows Tropical Battery's latest capital raise. The secondary offer, which closed on July 4, brought in roughly 697 million Jamaican dollars. That's about 4.3 million US. The raise was significantly lower than the original target of about 1.8 billion Jamaican dollars. The company says it plans to use the funds to pay down some of its debts and ease liquidity pressures. The Planning Institute of Jamaica has revised the country's debt-to-GDP ratio for the 2024-25 financial year to 62.4%, down from a previously estimated 67.3%. According to the agency, the update follows the full implementation of the 2008 System of National Accounts, which refines how GDP is calculated. The agency also said that based on preliminary estimates, Jamaica's economy grew 1.4% between April and June. With the revised ratio, the PIOJ said Jamaica is on track to lower its debt to GDP to 60% by financial year 2027-28. Motorists traveling on the east-west leg of Highway 2000 have started paying more following the latest toll increase. The increase took effect over the weekend. It sees some drivers paying between $20 and $200 more. Trans-Jamaican Highway operates toll plazas in Portmore, Spanish Town, Vineyards, and Maypen. TransJam said it was mindful of the financial challenges faced by many motorists. It says the new rates ensure adequate maintenance of the roads while not overburdening customers. Welcome back. Let's shout out our viewers. Let's see who is on Learn, Grow, Invest with the very first comment. We got David Gray saying, hi, money crew from Mobay. We've got Ryan Wallace says, good night. In the midst of the election fever, where the two political parties promise similar ideas to lead Jamaica for the next 5 years, I wonder how the JSE will respond, if they respond. Interesting time ahead. Dwight is checking in from Spanish Town. We've got the diplomat of the era who says, let's get this money straight out of ATL. It's time the JSE kick off a serious rebound. I agree with you. Straight out of ATL with Jamaica on my mind. We've got Warrell checking in from Montego Bay. The diplomat saying, blessings. Dwight again says, love to see Wasinka doing acquisition again. Humble Boss checking in from Negril. Life Roots is in Montego Bay where it's hot. It is super hot here in Belize as well. Who else do we have? Christopher checking in from Kingston. We also have Moses, Trini in the house who says, let's get this money. And Roswell saying good evening to all viewers. Looking forward to a next nice discussion. And of course, we will be paying attention to the budget debate that kicks off in about 50 minutes over on PBCJ's channel. But in the meantime, there are other things happening in Jamaica, happening in the country, happening around the Caribbean. And we're going to kick things off this evening with a discussion around Mayberry's latest bond offer. You may have been hearing the name Mayberry quite a bit, and Mayberry Bond and Bondberry quite a bit over the past couple of years. And so now there is another one on the market. And I'm sure you investors have more questions. So here to break down the offer in more detail is Vice President of Sales and Client Services at Mayberry Investments, Okelia Paradon. Welcome to Taking Stock, Okelia.
Hi, Kalila. Thank you. Good night, viewers.
Okay, so talk to us about this latest offer. It's been, is it about 2 years now since Mayberry started offering bonds? Well, this type of bond with the market behind it and all that.
Going 3 years.
Going 3 years already. Wow. So why are you coming back to the bond market now?
Well, it's overwhelming demand. Of course, you know that Mayberry offers the best rates. We deliver each time. So we currently had a bond that had matured. So what we're doing now is to offer our customers and prospective customers new way of investing for those new entrants in the market, right? And to actually shore up our capital base and the likes.
As the last one was in February, I believe.
Yes, that one could have been Bondberry. So
This is the Bondberry?
This is MJE, which is Mayberry Jamaica Equities. Yes.
All right. So explain the difference for those who might be a little bit confused.
So Mayberry Jamaican Equities, it's an investment holding company that just has Jamaican equities. It's actually a subsidiary of Mayberry Group Limited. So Mayberry Investments is different. That's where synonymous with Bondberry. That's where the Bondberry comes from. And Mayberry Jamaica Equities now is a subsidiary that does their own thing. They trade separately on the Jamaica Stock Exchange as well.
Okay, so how is this new bond under MJE, Mayberry Jamaican Equities, structured?
So it's structured in two parts or two tranches, right? You have the tranche 1, 13 months, relatively short, right? Offering a rate of 8.75%. Tranche 2, it's offering a rate of 9.25%. And you want to hear the good thing about it, Kalila, it's not subject to withholding tax. It's not tax on scores, right? So investors are getting that 8.75 and that 9.25% in their hands.
Nice.
Right? So that's how it is structured. So if you are someone who want to stay short, the 13 months would be for you. If someone that looking for something more for long term, medium to long term, then you have the 23-month option.
And 23 months really isn't that long. That time goes pretty fast.
It does. And the interest is actually paid to you quarterly. Right? So it's not a situation where you have to wait until it matures to get back at your principal and interest one go. Interest is payable on a quarterly basis. And if it is that you're minded And we'd recommend you can always reinvest that interest buying back into the same bond because the bond will be listed on the Jamaica Stock Exchange.
So quarterly starting when?
The calendar quarter. So we go January, February, March, and then you have April, May, June.
Oh, but I mean, if you buy into this offer now, it closes September 12th, I believe.
September 12th. So the first payment would be at September 30 because we try to do it for the calendar quarter, each calendar quarter. So you wouldn't get a full 90 days, right? But we start paying you based on when it closes. It's scheduled to close on the 12th of September. So it's already actually open. It's open from the 21st of August, I believe. Yes, the 21st. So it's scheduled to close on the 12th of September. So once it closed and everything is okay and it's listed, listing ceremony, etc., we would hope that, September 30 is the first quarter. If not, it will run to December 30.
Okay, so you don't have to wait necessarily until December. Your first payment's coming up right around the corner, a couple of weeks after you.
Well, let me put a disclaimer there because we know once you close, you have some little regulatory things that you have to sort out and you have to list. So once it's listed and it starts to trade, so I suspect, given all that is happening now, September 12th is close to September 30. The first payment may not be September 30. It may very well be December 30. December 30, yes. 31st.
Got it. All right, so you're coming back to market with a $1 billion bond offer. So 500 million you're hoping to raise in tranche 1, another 500 million in tranche 2 for a total of $1 billion. Do you want more money? Would you be looking to potentially?
Well, we can upsize to 1.5 billion. Yes. So that is a possibility. So if it is oversubscribed, of course we have the room. Come on, we can always upsize to 1.5 billion.
How can investors be sure that they are gonna get these payments? Are you using anything as security? Because in this day and age, following Usain Bolt is in the news again because of the SSL payouts coming out. People want to be assured that their money is safe with Mayberry, with MGE.
The Mayberry brand should say it all. Kalila, we have been around 40 years, basically. 30 or going 40 years. And the Mayberry Jamaica Equities, the collateral is actually the securities that make up that basket of stocks that they own. So that is a strong collateral. There's a claim or a lien over the assets. I think it's a ratio of about 150 times that you have over those assets as investors, right? So I don't want to get too technical and into all of it, but it's a secured nature bond based on the collaterals that make up the company or the basket of stocks that we hold.
Okay, we've been mentioning before that this is not the first time Mayberry is coming to the market or MJE is coming to the market with bond offers. What was the outcome of your previous bond?
So our previous bond, we had overwhelming about 450 bondholders, which is quite a bit, you could say. Very successful.
Fully subscribed?
Fully subscribed.
All the payments made on time?
All payments made on time. As a matter of fact, the paying agent is actually the JCSD, which is the Jamaica Central Security Depository. So persons who are not new to the stock market and you know about your dividend mandate, you want to put payment in place so it doesn't come in the form of a check. You do a mandate, the stock exchange or the JCSD will send you your interest to your bank account of choice. So that's how the payments are made.
So what makes this particular offer attractive to investors?
Well, I don't know about you, but 8.75%, I am not getting that in a bank account anywhere. And it's relatively short in nature. Interests are periodic in nature, quarterly payments. And we have a solid track record at Mayberry Investments.
We have a couple of questions from the audience as well. But first, let me ask about how do we subscribe to this bond? Like, what is the minimum investment required, and who can participate in this offer?
It's open to the general public, Kalila. The minimum requirement is 20,000 Jamaican dollars, and you can invest in increments of 10,000 Jamaican dollars. So you can visit our website at www.mayberryinv.com. We have a digital platform where you can actually just sign up to open your account. You don't need to come into office. You just go online, follow the instructions, sign up to get your account opened.
All right, let's end it with a few questions from the audience and comments. Ryan says, it's cool, Mayberry bringing some bond offers in Jamaican denomination, but I would love it if they do some U.S. denomination. Anything on the U.S. dollar front in the cards?
Well, we do US dollar investments, all right? And we may need to speak because we are a brokerage house and we do US denominated investments. In the nature of doing one on the public end, that's something that we could look into. Because we have to speak with the regulators, see what the regulators say about this, and then we can move it from there.
Learn, Grow, Invest community says Mayberry has been raising a lot of capital. Interesting to see how those bonds will be repaid when the time comes. Is it that you roll over from the previous bond and then use that to pay the new bond? How does that work?
Well, investors can attest to this. They are paid their monies. So it's not a roll. Monies are actually paid out to the investors. And if they want to reinvest, they will have to take back their monies to their brokers, whether it's external to Mayberry or not, in order to get into these new bonds. So it's not a roll.
Okay. Beck 9 says, I want to buy the bond, but based on the prospectus, the option for non-Mayberry clients does not work. Is that the case? Do you have to be a Mayberry client to participate?
No, you don't have to be a Mayberry client as long as you have a JCSD account. I do believe we have a selling agent on board. I think we have confirmed JMB, and we should have 2 other selling agents coming on board.
All right, so that answers the other questions. We had a couple other questions asking about who will the other brokers be. So you already mentioned JMB, and you said 2 more coming on board, and those announcements will be made, I guess, when that is signed, when that's official.
Right. And once you have a JCSD account, say for whatever reason the opportunity misses you to buy it at the IPO stage, you can actually go on to through your broker and do an order, just similarly like to what you would do to buy a stock. You can buy the bond on the platform.
Good stuff. All right. Thank you very much. Much appreciated, and good luck with this new offer. I'm sure it will be fully taken up as the previous ones have been. Thanks for joining us, Akelia.
Thanks for having me.
Okay. It's Akelia Paradon, who is the Vice President of Sales and Client Services at Mayberry Investments. And now we're going to head on into our poll question for this evening. Heading into debates, it's debate season, it is election season. Here's our question for tonight. Who has the better economic policies for Jamaica? You've been hearing all about the income tax promises for the past few days. The manifestos are both out now. Hopefully you've had a chance to compare and contrast and take some notes. Who do you think has the better economic policies for Jamaica? A, the JLP, B, the PNP, C, none of them, D, other. Leave a comment. We do have a couple of independent parties running this year. Who has the better economic policies for Jamaica? JLP, PNP, none of them, or other? Leave a comment. Let me know in the chat. You can also take that poll on Twitter or on YouTube and in tomorrow morning's email. Up next, it's your market recap, and I'm going to have to read out the market recap for you live tonight because we've been having some technical challenges. I understand we have some internet difficulties, so we haven't been able to get the segment uploaded. But it's time now for your market recap, brought to you by mymoneyja.com, the official data partner of Money Media, reminding you that you can get 10% off your subscription with the code MONEYMISSION. Just head on over to mymoneyja.com. So the JSE combined index was mostly flat last week. It declined it was up by 0.3%. 126 stocks traded across the main and junior markets for the week ending Friday, August 22, 2025. Let me share my screen just to make you guys be able to follow along a little bit easier. Share screen, market recap. Hopefully this makes it just give you a little graphic to be able to read along. 126 stocks traded across the main and junior markets for the week ending Friday, August 22, 2025. 57 made gains, 59 lost value, and 10 stayed the same. 135 million shares changed hands on the Jamaican dollar market, valued at $687 million. Transjam was the week's most traded stock, with 39 million shares changing hands. It started the week at $3.75. Bostridge traded the second most shares. It opened Monday at $2.38, down 14%. And Wigton rounded out last week's most traded stocks, up 3%. Now let's see who had the biggest gains. Spur Tree Spices was the JSE's top stock, up 24% to open the week at $1.20. Consolidated Bakeries was the second biggest gainer, up 18%. And Express Catering rounded out the top stocks, up 15%. On the losing side now, R.A. Williams lost 28% to start the new week at 34 cents. Iron Rock Insurance fell 22% to open Monday at $3.91. And KLE Group fell 19%. Over on the Trinidad and Tobago Stock Exchange, the composite index fell 10 points last week. That's 1%. Massey was the TTSC's most traded stock. It opened Monday at $3.90 TT. Ansa Macal was the TTSC's top gainer, up 6.5%. And on the losing side, Guardian Holdings fell 10% to open Monday at $15.22 TT. Over in the U.S., the Dow Jones gained 1.5% last week, while the S&P 500 was flat and the Nasdaq dipped 0.5%. At the pumps, gas prices in Jamaica fell 12 cents last week, while diesel prices dropped 56 cents. In foreign exchange trading, it took an average $160.84 Jamaican to purchase $1 US last Friday. That's 54 cents less than the week before. One Canadian dollar cost an average $116.89 Jamaican. One British pound cost $216.83 Jamaican. And you could buy €1 for $188.94 Jamaican on average. Finally, on the crypto markets, Bitcoin prices fell about 2% over the past 5 days, trading at $112,318 on Monday. Meanwhile, Ethereum was up 6%, trading at $4,619 on Monday. That's your market recap, brought to you by mymoneyja.com, the official data partner of Money Media. Use the code MONEYMISSION for 10% off your subscription at mymoneyja.com. All right, it's time for the analysts. And before I introduce our analysts for this evening, let me take some of the poll questions or poll responses. Let's see who we have. Okay. The question again, reminding you of the question: who has the better economic policies for Jamaica? A, JLP, B, PNP, C, none of them, D, other. Leave a comment. So Malik says A, JLP. Raquel says D, which is other. Leave a comment. We need a rollback on the 300% first. That's the salary increases that the politicians gave themselves. The Buffett says JLP. The Diplomat says JLP all the way. Ryan says JLP has the better economic policies to this day, although they are kind of hanging since Dr. Nigel left the party and Jamaica for a seat at the IMF. Kilobyte says, what's the difference between none of them and other? Other is if you have just a different opinion, like completely out of left field, or maybe one of the other parties. I don't know. Some people just have not interested at all. Sherwayne says, other. I know PNP has a history where they don't really pay much attention to the economy, but right now I don't know who has the better plan because I haven't read up on anything. Latoya says A, JLP. Day and Night also says A, JLP. So here in the chat, it looks like JLP, it is believed by our viewers, has the better economic policies for Jamaica. We'll see how the poll results go online later tonight and tomorrow morning. Now it's time for our analyst segment. There have been a lot of ups and downs in the market since the pandemic. The JSE went from one of the best stock exchanges in the world to being listed among the worst. But it's been a couple of years since then. So, how has the market been performing recently? Here to break it down is corporate manager at JMB, Leovani Dillon. Welcome back, Leo.
Yeah, man. Good night, Kalila. Good night to the viewers, too. What doing?
Yeah, we're great. And I know you are eagerly anticipating the debate tonight as well. So let's get right to it. How has the JSE performed over the last 3 years?
All right. So over the last 3 years, the JSE hasn't done so well. Of course, that's no news to anyone. So it's been a while since the market has had any good performance. So the last time was like in 2019 when we saw good performance in the markets. If I can share my screen here, this might assist with showing some of it here. So all right, so this is the so you can imagine it like this. Y-axis is the years, so going from 2019 to 2025 at the bottom, and then the x-axis is the quarterly performance. So Q1 performance would be like in the first column, right? So in 2019 you had a 31% increase in the combined market, right? So that's main, junior, everything, right? So that was the last solid year in the market. So you've had a little positive 2021, a little positive 2024, but by and large, really not looking that good, right? Now, there's some themes I want to highlight. So just going, go through some of the slides here and just to show them. So, all right, so this is another way of looking at it. So what this is showing is what happens if you plot the returns of a particular stock on the 3-year time horizon and on the 1-year time horizon, right? So what you're really looking for example, if you look at stock that has performed well over the last year, it would be more in this region. I'm not sure if we're already showing on the screen, but it would be more to the right. And if I start not performing well, it would be more to the left. So what you're realizing is over the last year, you see Carrera is way over the corner there. Over the last year, Carrera is up over 80% in the market, right? So it's done very well for investors. So that one's all the way over there in the blue. Now, if you look on the JSE main market, so that's the index itself, what you'd realize for the year, it's not doing so hot. Over the last year, it's not doing so hot. Over the last 3 years, it's actually underwater too. Again, no surprise there, right? Now, when you look on the individual names, so remember, when we look on the big picture, it looks very bleak. But when you go under the surface, what you're seeing, you have some good performance. So you have you have the Caribbean Cement, you have the Carreras, the Scotia Groups, the Syncos, right? That has actually done very well over the last year. And even over the last 3 years, they've done fairly decent, right?
Maybe I missed it, Leo. What does yellow represent and what does blue represent?
All right, so the blue is just the main market. The main market carve out here at the bottom, and then the blue way at the top is just highlighting Carrera's stellar performance in terms of how it maps out, right? But
and what does yellow stand for?
The yellow is just the point at where they fall on the graph. So for example, let me use one as an example. So Carib Cement here, right? Where Carib Cement is, what it's showing over the last 3 years, Carib Cement has been up about 60%, and in the last year, it's been up about 40%.
Oh, so you just okay. I thought there was something behind the choice of the colors. So you just use to highlight Carreras and the JSE
in the JSE,
the others. Okay.
Yeah, as opposed to the others, right? So it's just really showing where they fall on that spectrum. Now, just to zoom in a bit, because this one is not really clear in terms of what's happening in this spot here, right? So if you zoom in a bit, you can see what's happening. So a lot of the names kind of in that space. So you have the masses, the Barritas, the GK that haven't done so well over the last 3 and over the last year, right? However, when you zoom out a little bit more, so now we're looking at 5 years out now, last 5 years performance. Again, Carreras has done fairly well. Carib Cement has done fairly well over the last 5-year period. Seprod, Grace Kennedy, Barita. So a lot of them more on the positive spectrum. So what this is kind of highlighting is that, again, in recent times, the market hasn't been so hot. However, with stocks in general, as we know, when you stay invested for a longer period of time, you tend to have better outcomes in general. So you can see over the last 5 years, a lot of them has been, flat or positive despite the downward drag in the market. But if you're looking on a shorter time horizon, like a year or so, you realize a lot of them kind of underwater. So again, just highlighting that at a bigger level in terms of the importance of staying over time. Now, another thing to point out here, of course, one of the reasons why Couriers has done well, again, no secret, is the dividends, right? So, that's basically one of the biggest dividend payers in the market between them and probably TransJam. So they've done very well. So if you look at the dividends over time, the dividend yield, it's like 8%, or 2025 isn't out yet, finished yet. So they have more to come. But if you look back in history, it's been pretty high. And that's been one of the big drivers of the optimism around the stock. And of course, in a falling interest rate environment, their expectation that actually bodes well for them. So putting it another way, and I keep harking back to these charts because I want to, press the point of the importance of a long-term viewpoint when investing, right? So putting it another way, you go back to 2021, you fast forward, what you're seeing is that the return on the stock, the capital gains only has been significant, 144%. But when you add dividends to that, it actually adds 110% in terms of the returns over that period. And bear in mind, these dividend numbers is after tax. So it's assuming that when you get the dividends, you pay the tax, of course, got to take it out, withhold at the same time, and you reinvest it. That is what it would have earned you. So you're basically branching out in terms of the returns that you're getting. Now, looking again, this one is about, Scotia Group, right? So this is Scotia Group's history now. So Scotia Group, again, has been a decent dividend payer over time, consistent dividend payer, and they've also done well, again, if you map it over time in terms of the expected returns. And then similarly, you've seen a similar thing with Carib Cement. They recently started paying dividends. I think it's back in 2022, They recently started paying dividends like once a year. That's a decent amount, and they're picking up the amount that they're paying each year too, right? So you can see that steadily grow from $1.50 all the way up to $2 now. So you've seen that movement over time. So, all right, so that's it. So I just want to step back now with some of the broader context. So what we're looking at over time, yes, the market hasn't done that well, right? But what we do expect is that at some point it's going to recover. So what's helpful is that when you, of course, you have a diversified pool of holdings, but when you have holdings in that basket that have dividend payments coming in the times when the market is kind of on a lull, your ability to take those dividends and reinvest can be very beneficial in the long run, right? Meaning, so let's say for argument's sake, the stock stays flat for 3 years, but it keeps paying dividends, and you can take that dividend and keep buying more of the stock at that depressed level. And then when it does rebound, instead of you having 1,000 stock units, you might end up with 1,100 stock units for argument's sake. So when the move does occur, you have more skin in the game at that point. So again, it's just to emphasize the importance of long-term investing in a broad view, and to also be well diversified, right? It's just to highlight the importance of that in our overall investment strategy. And also to point out that while on the surface, when you look on the market as a whole, it hasn't really done so well. There are individual names that have done very well. So just to highlight some of those main points, for the videos out there.
Okay, good to know. It's like you said at the beginning, it's been a very difficult 3 years. You pointed out some stocks that, to me, I would say that those are outliers. So you have your Carreras that you mentioned, your Carib Cement. Would you say that the market has recovered from the pandemic?
Well, again, if you look at the index itself, you can see that hasn't really been the case. But why I pick those stocks in particular, is that those stocks are actually some of the larger companies. So it's more like the blue chip names, so companies with market caps north of like 70 billion, right? So it's the bigger companies in the market. So it wasn't really, cherry pick like that. So it's just because those companies, because how the index is calculated, it's based on it's a value weighted index, meaning the bigger companies have a more sway in the movements of the market. So kind of like in the US, S&P, you have the Mag 7, which basically outsized sway and the impact of how the S&P 500 work. So we have that same kind of mechanism in terms of the math, right? But no, I don't think the market has fully recovered because again, COVID, put a damper on investor sentiment, and then the increase in interest rates that would put another damper on sentiment. And then once that, kicks in, then persons, can tend to get overly negative. So it's kind of like, when the bull market is going, persons get overly optimistic and then they get overly pessimistic. So it kind of goes in a cycle. So I don't think it's fully out of the woods yet in terms of the sentiment in the market isn't where it was prior to COVID. I mean, if you look on certain metrics, it's obvious in terms of like if you look on the PE ratios going into COVID versus the PE ratios now and the price to book multiples now, it's night and day. So but for example, in the financial services industry, for example, going into the COVID, the multiple in general was like 3 times book, 2 times book easy. And a lot of these companies are now they're trading at like 0.5, 0.6 book. So yeah, you can see it's just a complete reverse in terms of the sentiment in the market. So I don't think it's there yet. If you look on the ratios, it's not nowhere near the COVID levels, pre-COVID levels.
What would it take for the JSE to return to pre-pandemic levels?
I think one of the main drivers would, of course, be lower interest rates. Lower interest rates, improvement in overall profitability of the companies. I mean, don't get me wrong. Some of the companies like Sagicor recently produced some phenomenal numbers. In the 9 months, 6 months period, Scotia produced some phenomenal numbers. Carrier's producing good numbers. So there's multiple companies out there that are producing good metrics, but it's just a broader basket of companies that would go a long way. And of course, lower interest rates would help fix that because, as you can understand, all else being equal, if you reduce interest rates, it spurs business activity. A lot of these companies would have debts on the book. The rates on those debts come down. So that would go a long way to help. And then, of course, the companies being able to turn the environment, the lower interest rates into higher profitability and revenues. So that would, I think, investors seeing that sustained would help. And then the third piece would, of course, be an increase in the dividend amounts from a lot of these companies in terms of the payments. And then that would be the third piece that I think would get persons more excited and back into the market.
Yeah, speaking of interest rates, that's probably one of the most used phrases on the show over the past years. So the BOJ recently decided to hold the policy rate at 5.75%. We've seen it since COVID go up and then come back down, start to come down anyway. How has the increase and then now the decrease of interest rates impacted the market over the past 3 years, would you say?
Yeah, man. So the increase, it did put a damper on the market, but I think it had put a damper on the market. The decrease hasn't really done much for the market, as you can see, because I think the last decrease was in May, and you haven't really seen any material change in terms of the market performance. So I think it's gonna take more than a few rate cuts in order to really get things going. So usually when the BOJ cuts, they might have 25 basis points here or there. It's gonna take more than a few, and it's gonna take some uncertainty that exists globally, kind of being suppressed in the market. So as it is now, of course, there's a lot of uncertainty around what's happening in the US. Especially like with the whole tariff situation impacting interest rate decision, because if you look on the global context, if the tariff uncertainty has basically stayed the US Fed's hand, meaning chances are if that didn't exist, they would have cut interest rates more significantly already by this point. They probably would have been down by 100 basis points. That would have given, they'd probably be down by one percentage point. So probably like, they'd be down. Once that down, they cut their rates, it gives a lot of room for the BOJ here to cut their rates. So that, of course, would have, bode well. So I think Yes, I do. It does have an impact, but it's not point for point. So it's not like 125 basis points you're gonna see an uptick in the market. You need more sustained cut and a sustained view that the path of rate cuts is almost certain. Like the expectation is that they're just gonna keep coming in order to help boost that confidence. But it is an important factor, because remember, not only is it itself beneficial, but it also says something to the market when you have an environment that can happen in terms of the rate cuts, in terms of the signal. So there's multiple positive spin-offs that you get from low interest rate cuts, and it just creates what do I call it now? The opportunity cost. So how persons will look on it, for example, you have Mayberry on a while ago, and they're offering these higher rate bonds. In a lower interest rate environment, you wouldn't be getting those rates. They'd probably be issuing bonds maybe at 5, 6, and then you'd say, boy, you know what? Let me go invest in equities because this rate is too low. But that's the rates that would be in the market at the time. So that competition now that exists where persons look on these higher interest rates on the fixed income securities and then look at equities, that competition that dies down once interest rates come down. So it's a very, very critical piece of the puzzle in terms of the overall market sentiment. It's not the only thing, but it's a big part.
Yeah. Well, we keep tracking, Leo, in good times and in bad. We follow the market and look for the potential. Look for, how we can potentially try to make some money off of it, regardless of where we are, good or bad.
Well, let's see what happens with the JSE if we get that short selling, because that would create a different market dynamic. So that would be interesting. So I think that would be interesting.
Lower interest rates, you said?
No, the short selling of the JSE, because it's selling, that would create a different dynamic, it would create a different dynamic in terms of how persons position themselves in the market could.
They've been promising that for over 5 years now, and I feel like because the market is where it is right now, I don't know that it's time to introduce it.
That's the thing. I agree that now might not be the best time, but getting it ready does create a more dynamic market. Well, all right, so this is time for another show, to be honest, but this is a conversation for another show. I don't think we have time to go into it. However, I do think it does open up the opportunities for a more vibrant market in terms of, the financial products that can be created in order to reduce risk and to better improve liquidity and all of that. But yeah, that's a conversation for another time.
Yeah, I have some other thoughts on that too, given market manipulation and all things that have been in the news the past few weeks. But let's save that for another week.
Yes.
We want to get to these debates. It's a quarter to the hour now, and we want to catch the debates live. So we're going to leave it there. Thanks for joining us.
Yeah, man. All right, take care, everyone.
Okay, let's take some of your final comments before we leave. Roswell says long-term doesn't work out all the time. It's a market for medium outlook. Yes, if you're a dividend investor, it will work well for the investors who want income. Learn, Grow, Invest says in this case, dividend stocks have also provided capital gains in the same period. Good observation. Raquel says, nope, we haven't recovered. That's a fact. Roswell, again, Indus Pharma stock, in my view, has been the best in dividend consistently. Lasco Distributors is also good. And then Learn, Grow, Invest wants to know, have the businesses recovered from the pandemic? Good question. Have they? Things kind of rough right now. But anyway, that's going to do it for our show this week. We're all excited to see what is coming up in the debate in just a few minutes. And so I'm going to wrap the show there, reminding you to like the video, subscribe to this channel, share with a friend, follow us all over social media at kalila.money and at Money Media JA on Instagram as well. Subscribe to the newsletter at getmoneynews.com. That's getmoneynews.com. And of course, tell a friend about taking stock, because investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Enriquez Reynolds. See you again next week.